It was a sunny morning in Washington, D.C., but what came out of the Rose Garden that day sent a chill through the world economy. President Donald Trump stepped up to the podium and made an announcement that would ripple through every market, every boardroom, and every factory floor across the globe. Starting tomorrow, he said, the United States will impose tariffs on all imports, a baseline of 10%, with much higher rates for nations running trade surpluses against us. It wasn't just talk. China, 34% tariffs. India, 26%. Japan,
24%.
Even allies like the European Union were hit with a 20% wall of taxes. And all foreign-made cars, a 25% surcharge, no exceptions. To Trump, this was reciprocal justice. He claimed the U.S. was being exploited by foreign nations, cheated by high tariffs, trade deficits, and unfair deals. His administration would now charge them half of what they're charging us. But this wasn't just a policy move. This was a statement that America would no longer play nice. The message was clear. America is done playing fair. It's time to play tough. Markets didn't wait to react. Within hours, the Dow Jones dropped 1,000 points. Tech stocks tumbled, Apple slid, Nvidia crumbled, and retail giants braced for impact. The Nasdaq fell by over 2%. Tariffs meant higher costs for imported semiconductors, electronics, sneakers, smartphones, everyday goods. And consumers? They'd be footing the bill. Meanwhile, gold, seen as a safe haven, flirted with record highs. It was clear. The markets weren't cheering, they were bracing. So what was the goal? Economists say the Trump administration had a three-pronged mission. 1. Reignite American manufacturing. Make the U.S. own industrial again. 2. Use tariff revenue to offset massive tax cuts on the horizon. 3. Create a clear U.S. versus them narrative before the next election. But there was a fourth, unspoken reason: power. Tariffs gave the U.S. a bargaining chip in global negotiations, and Trump wanted to show that America could still flex economic muscle. Economist Abigail Hall called it economic dodgeball, a game where everyone gets hit, but no one really wins. He called it out plainly. If he's trying to liberate us from sound economic policy, then he's succeeding. Tariffs don't just punish foreign producers. They punish the people buying those products too. From smartphones to sneakers, video games to groceries, everyday Americans were now going to feel the weight of America first every time they opened their wallet. Businesses, investors, and especially consumers were all likely to lose, because this wasn't a chessboard. Nations aren't pawns. And just because others jump off a cliff doesn't mean you should follow. And then there's the question of retaliation. China, for example, wasn't just going to take the hit. Trade wars aren't one-sided. Economists warned that Beijing would likely impose tariffs of its own, targeting American agriculture, tech, and even finance. And if China moved, other nations might follow. The 34% tariff on China, layered on top of earlier taxes, brought the total trade burden to over 50%. The likely outcome? Fewer Chinese goods in American stores, more expensive electronics, toys, and appliances, a retaliatory strike from Beijing, and perhaps worst of all, rising inflation and economic uncertainty. So, who wins in all this? Well, that's the irony. The loudest applause came from special interest groups, powerful domestic lobbies like the United Auto Workers and Teamsters, who would now face less competition from foreign firms. But the cost? Spread out across 330 million Americans. In the short run, some industries might benefit, but for millions of consumers, small businesses, and import-reliant companies, this policy was a punch in the gut. In economics, there's a term: concentrated benefits, dispersed costs. It means a few gain a lot, while everyone else pays a little. And those little costs add up fast. Trump's defenders argued this was necessary to level the playing field. After all, other countries had high tariffs too. Some believe this could be a temporary dip before long-term gains. But history disagrees. Tariffs have rarely brought prosperity. Instead, They risk global retaliation, reduced trade, and recession. But as Professor Hall put it, just because your neighbor jumps off a cliff doesn't mean you should follow. We're no longer in the 1800s. The world is connected. Economies are interdependent. Trade isn't a zero-sum game. It's a shared system. And pulling one thread can unravel the whole fabric. Other countries now face a choice. Do they fight back, raise their own tariffs, and trigger a trade war? Or do they form new alliances, perhaps with China or Russia, leaving the US on the sidelines? This is not just about money. It's about trust, about whether America is still a reliable trading partner or a lone wolf. The future will depend on whether the next administration doubles down or tears this system down. Tariffs aren't carved in stone, but reputations are harder to rebuild. In the end, this wasn't just a new tax, it was a new era, one where global economies must ask themselves, is the price of protectionism worth the cost of connection? What happened that day in the Rose Garden wasn't just a press conference. It was a pivot point in global history, a signal that the world's biggest economy was willing to raise walls instead of build bridges, a gamble that could either rebuild American industry or spark a global economic Cold War. The effects of this policy are still being felt, and the true cost? It may not be in dollars alone, but in trust, in opportunity, and in the shifting tides of global power. Because when America taxes the world starts looking for a plan B. If you thought Spain's housing crash or Canada's affordability crisis were alarming, this might be the biggest red flag yet. Thanks for watching.